What's up, guys? It's Mr. Fit to Flourish, and today I wanted to walk you through really quickly the fastest crash course on how to predict price action and predict where stocks are going to go and know knowingly and be confident in terms of, hey, where is the price going to go? So I wanted to do this because a lot of people on TikTok are like, hey, how do you always know where price is going to go? I make all these predictions on TikTok. You can follow me on TikTok, link in the bio. But every day I make a prediction for the next day on where stocks are going to go. And it's pretty easy to predict where price is going to go because I know price action. So I wanted to teach that today really quickly and give you guys an understanding of how easy it is to find these prices. So again, I have the link to the Discord in the bio if you want to learn more, but a lot of free stuff here on YouTube and TikTok. But link in the bio if you want to know more. Who am I? Fit to Flourish, former college football player, biochem degree for my BS, and then PharmD. So I'm a pharmacist, a doctor of pharmacy. Anyways, I like to trade stocks. A lot of the pharmacists that I've been around, I'm thankful to be around because I've met some millionaire pharmacists who have taught me to get into stocks. I've transformed a lot of people's trading. Chris made $30,000 in one day on options. So I'm really good at options. I'm not going to lie. I'm not going to cap. I'm really good at options. So I try to be humble, but yeah, I'm really good. I'm pretty good at options. But anyways, let's get right into it. So the first thing that we need to know when we are looking at trading is we need to know, in price action, we need to know what the bars mean. What are these freaking candles? What do they mean, man? So that's the first thing that I want to get into. And that's the first thing that I always like to teach as well. So candlesticks, you first need to know candlesticks. There's a lot of people I realize that when I'm teaching them, nobody, like 95% of traders don't know how to read a candlestick. And that's the first reason why people lose in trading. So I've been teaching a lot of people, and some people have been trading for 10 years, 5 years, and they don't know how to read a candlestick chart. And it's kind of crazy. Anyways, green means that price is going up. The bottom part is where price opens in a given time period. So on 5-minute time frame, 10-minute time frame, an hour, whatever time period you're looking at, this is where the stock opens up. And then the top part is where the stock closes. Now the high and the low is the lowest and the highest that the stock has price that the stock has seen in that given session. Now for a red candle, that means price is going down. So the open and close is opposite. So we start at the high, the top part of this box, this rectangle. We close at the bottom part of the rectangle. The low is that bottom part, and then the high is that top part. The middle part is called the body. And then these skinny tails are called wicks. That's the first thing you need to know, all right, when it comes to candlestick charts, all right? Now, the next thing you need to know is you need to know trends. So obviously uptrends. What is an uptrend? An uptrend is bullish. That means that we're getting higher highs and higher lows. So that's when from left to right, the chart is going up. The next thing you need to know is a downtrend. From left to right, you're getting lower lows and lower highs. The stock and the price is going down. Okay. Now, the most important concept out of all of this that nobody talks about, except I swear only me, I swear, I've never seen anyone else talk about this concept. You need to know trend bars versus non-trend bars. What do I mean by that? Trend bars are big bars, and they contribute to the direction of the trend. Non-trend bars are tiny bars or small bars like dojis, okay? And they don't contribute to the direction of the trend. What do I mean? Well, let's take a closer look at that. Let me zoom in here. So a trend bar would be these. This is a downtrend. Obviously, we're from left to right. The stock price is going down. A trend bar is demarcated by these arrows, big red bars. They contribute to the direction of the trend. Non-trend bars are these small, tiny bars. There's no information there. The price is just going sideways. When you're trading and you see price going sideways with these little trend bars, don't get in the trade. When you see trend bars, so big pushes in a direction, then you get in the trade. That is something you need to remember. And that's the easy way to tell where price is going. Don't look at non-trend bars because it's just going to go sideways. That's called consolidation. You look for trend bars, okay? So now we know bars, we know trend bars versus non-trend bars, we know direction. What else is important when it comes to trading? Well, we need to know something called wicks versus non-wicks. Actually, what I'm going to do here is I am going to pull it up on a regular chart. So this is a chart of NVIDIA. This is the 2-hour time frame. So what do wicks tell us? And this is very important. So there's two different types of wicks. There's top side wicks, and then there's bottom side wicks. And this is the easiest way to read where price is going. Bottom side wicks. Okay, so you don't need to memorize the order and balance stuff, the ICT, SMC, ABC 123, liquidity. I hate when those people try to confuse you, because like they're trying to sell you a course or something and they're like, oh, liquidity is swept here. Like, shut up, bro. Like, shut the fuck up, bro. That shit's so annoying. Anyways, you don't need that, bro. Like, just look at the size of the bar and price. It's just a pattern, bro. It's a pattern of where the price is gonna go. And the best traders in the world keep it simple. They don't do like, oh, we swept liquidity here one time and came back into this gap. Like, bro, sorry. Anyways, all right, topside wicks. What is a topside wick? Basically, it's showing you that we went up really high, okay? Price went up really high, but remember what I said, we closed down here, but the wick is showing you price went all the way up here. So what does that mean? That means that we pushed up, but then sellers stepped in. So topside wicks means sellers stepped in. Sellers are stepping in, which means that price is likely to go down. There's sellers in this area, price is likely to go down. So what happened here? We had a wick up, and then guess what? Price got pushed down because there's sellers in this area. What about bottom side wicks? So bottom side wicks like this guy here, bottom side wicks like this guy, it means that we push price down all the way down here. But guess what? That means that buyers are stepping in, because we push price down, but then there's buyers down there. So bottom side wicks means buyers stepping in. Charge El Laptopio. All right. Means buyers are stepping in. Okay. So again, we know bars, we know bar sizes. Another thing too is over exhausted bars. So bars that are way big are typically followed by a reversal. So that's another good thing to know. They're followed by an immediate reversal. Why? Because there's so much selling happening that all the sellers sold and they're tired. They're giving up. It's called an over exhausted bar. So they're followed by an immediate reversal. As you can see here, this bar was way too big. So you typically need an equal amount of buying and selling. This was a lot of selling. Okay. So price got pushed so low that buyers are starting to step in, because now the price is just really low. So you can see what else happened here. Bottom side wick, price starts to turn back around. So I don't do anything fancy. Yes, this is order imbalance. Yes, this is a fair value gap. Who cares? It doesn't matter what you call it. You need to understand what is going on here in supply and demand. Stocks, trading, markets, economics, business, it's all supply and demand. What's going on? Oh, price was really high. It was too high. I don't like it. So there's less demand. Price goes down. It goes down so low that there's more demand. That's all that's happening, bro. Like, don't pay attention to these liquidity swept into this bottom side zone. Like, man, shut up. They're trying to sell you a course. I'm telling you right now. Just come to my YouTube page, check in with me. But yeah, so big bottom side wick, buyers are stepping in. That's all you need to know. Okay, keep it simple. Keep it simple. All right. And then last but not least, there are two concepts you do need to know in order to kind of just kill it after this. And I'll put it all together for you. Okay. The final concept is going to be trend, or the final three concepts actually. So we're going to look at trend lines. So what is a trend line? So a trend line is a line that connects 2 points. If it's an uptrend, it'll be a line connecting 2 lows on the bottom of that trend. So this would be a trend line. And you just kind of continue it on, and we should hold that trend. As soon as that trend line gets broken, then we know we have a change in direction. Okay. A change of structure, change of direction, whatever you want to call it, market structure shift. But we connect 2 lows and then just keep that line going. And as soon as we break below that line, you're like, uh-oh, we're probably going to go in the other direction. We're changing trends. Okay. And then the line since this is an uptrend, the trend line is drawn on the bottom, and then the line on the opposite of the trend line that's on the top here, it's called a channel line. Okay, and we create a channel. So that's what this green figure is that I have here. This green figure, let me make this a little bit bigger. So you can see the bottom is the trend line showing you an uptrend, and then the top line here is the channel line. So it just creates a channel. Okay, and trend channel, this is a trend channel, includes the highs and the lows of a range of a trend pretty much. So it includes all the highs, all the lows, and the tighter the trend channel, and the better the trend. So it's likely to continue. But like I said, when we break from that trend line, we're probably going to go down. So I said, hey guys, Nvidia is showing weakness. I said this yesterday on TikTok too. I said it's probably going to come down. Look, we broke the trend and it came down. Look at this. Today it's like bleeding out of the sky. We got puts today and everybody made a lot of money. Whoa. All right. So that's a trend line there, trend channel. And I want to show you a downtrend as well. So this would be a pretty good example here. All right, so on this leg here, you could see on a downtrend, so from here to here. So we're just looking at this little area here. It's a pretty good downtrend here. All right. So on a downtrend, the trend line is the top line since we're going down. So trend line is here. And this will be the channel line. All right, channel line is opposite the trend line. But notice on this uptrend, the trend line is the bottom line, trend line. And this is a distinction I had trouble remembering when I first started trading. But the trend line in an uptrend, it's on the bottom. So in an up, it's down. And then on a down, it's up. On a downtrend, it's on the top. Okay? And then notice again, this trend got broken. So trend got broken. So we were going down and all of a sudden we go up. And that changed the trend back to up. All right. Good stuff there. All right. So not only do we know trend lines, uptrends, trend bars, non-trend bars, we need to know moving averages. Moving averages. What are moving averages? So moving averages are lines, and I like to use the exponential moving averages, EMAs. So they're these lines that calculate the average price of a stock. All right, they're lines that calculate the average price of a stock. So let's get into that real quick. Let me find. Come on, moving averages, moving averages. All right, well, I can't find it, so I'm going to leave it on this page. Anyway, so there's the 9 moving average, which calculates the last 9 bars, and it's going to be closer to the bars. So that's this pink line. And then the 20 moving average is also pretty close. It's the yellow line here. But basically, if we're trading above the moving averages, then the price is likely to keep going up until we break below. Once we break below the moving averages, then we stay below until we break back up. Okay, so just keep that in mind. Moving averages give you the average price, and then the price likes to kind of go back down to the moving averages. As you can see here in this example on Nvidia, it's kind of just staying on this moving average, and it's staying above. If it's staying above, it's going to continue above until it breaks below. When it breaks below, it's going to stay below until something happens to make it go back up. Okay, and that's just how stocks move in general. So again, when I'm looking at moving price action, I'm like, oh, okay, the stock is going to continue to move up until something happens and it goes below. And then when it moves below, it's going to stay below until something happens and it moves back up. And that's part of auction market theory. I'll link that video somewhere here. And then last but not least, there's actually two more things. So these lines are like support, resistance, key levels, basically. Key levels. But you need to understand support and resistance. What is that? Resistance is an area that the stock does not like to go above. So this line acted as resistance right here. And then also resistance here. Like we're trying to move up, but we can't get past that. And then support is an area where the stock does not want to go below. So it's trying to push down below this line, but it's not getting passed below this. Okay, so in this case here, it's acting as support here. Now they do flip. It does flip. So support can go, resistance can turn into support. So like right here, it's resistance. It's cooking past it right now though. But right here is resistance because we're moving up and we're not getting past it. Okay, but these lines get tested a lot. So understand support and resistance. The lines, those areas get tested quite a bit. Okay, and then last but not least, there's momentum. So for momentum, it kind of tells you how much momentum is there for the stock to move up. So you can use things like the volume RSI and RSI or MACD. These are called momentum indicators. They're not on the chart. They're actually off of the chart. Things that are on the chart are called overlays. Things that are off of the chart are called oscillators. So they oscillate up and down, but it tells you like when it starts to move up, it shows you like, okay, the stock's probably going to move up. When it starts to move down, it's showing you, oh, there's not enough buying momentum. The stock is probably going to move down. So that's the last piece that I look at when I'm making predictions. Okay, so let me put it all together. So I like to use the 2 hour time frame and the daily time frame, but mostly the 2 hour time frame because it shows you a lot of institutional orders. How do I know that? Because I've been trading forever. Anyways, no, but you look at these, look at the wicks. The wicks, in my opinion, give you the most information about stocks. Like, I don't care about, oh, liquidity sweep, liquidity this. I don't care about that. What we care about is these wicks, because the wicks will tell you where the stock is going to go. Because what the wicks are telling you is we're testing price, so we're testing supply and demand. So when we're going down, we're testing the demand. And then buyers stepped in here. So we know there's a lot of buyers here. So this wick tells me that. The wick tells me we pushed the stock price down so low that buyers had no choice but to just step in. It's called buyers stepping in. Even here, we try to push it low, buyers stepped in again. So price is going to go up. Up here, again, remember, topside wicks means sellers are stepping in. Topside wicks, sellers stepped in, pushed the price down. Okay. But overall, when I'm looking at this is how I analyze the stock. So this is NVIDIA. The first thing I do is I'm like, okay, NVIDIA is in an overall uptrend. This is how I predict price, okay? And I do it live too on my TikTok videos. Usually I don't see the stock and I just pull it up and I'll just do it live. So overall, the first thing I look for is, hey, what kind of trend is this? Oh, I see the bars are going up. So this is probably an uptrend. Cool. Yeah, I might draw a trend line. You know, you could draw your little trend line here. And then if you want to, you can go to the tools here and do a parallel channel. A channel is even better because it includes the highs and the lows of that range. So right here, the highs and the lows of the range. The next thing I see is we're moving up. We're above the MAs. So this is pretty bullish. So when it was here, I'm like, okay, guys, it's still bullish. We're moving up. Yeah, we pulled back, but we're still moving up and creating higher highs. We're breaking past these resistance levels. And then all of a sudden, we get a downside move. And we break below the EMA. And then we have EMAs crossing. So we also fall out of this downward channel. So I'm like, hey, guys, right here, I was like, hey, this is coming down. It's coming down pretty hard. Okay. What's happening? It's coming down pretty hard. All right. So pretty easy way to predict price action. All right. So hopefully that helps you guys. Really good breakdown on bars, wicks, trend bars, non-trend bars, trend direction, moving averages, channels, and momentum. So that's really all you need to know. Forget about the ICT, SMC, fair value gap stuff. Keep it simple. Understand this first. And I promise you'll be able to predict price action pretty easily just looking at the charts. And like, okay, this is where to go. Cool. That's all I needed. Mr. Fit to Flourish. Like, share, subscribe. If you learned something today, I'm outie. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.